Hey everyone, how's it going? It's Russell Matthews. Now, it's no secret that exchange-traded funds are getting more and more popular as more and more retail investors start investing for the first time, and it makes sense. This allows you to invest in a whole bunch of companies with one purchase instead of just investing in one, diversifying your portfolio and potentially exposing you to more companies that could have potential gains. But depending on where you are in your personal investment journey, it could be rather expensive to spend up to $300 on just one ETF, and as an added problem for us Canadians, some of the most popular ETFs aren't traded on Canadian stock markets, potentially subjecting us to currency conversion fees and additional commissions depending on which investing brokerage you use. That's why in today's video, we're going to talk about 5 of the best ETFs right here in Canada under $40 a share so that you can get started no matter how much money you have. All right, let's take a look at these ETFs. But before we do, make sure to check out the links in the description where you can set up your very own investment accounts so you can take your wealth into your own hands. All right, let's get started. We're going to start with some more traditional ETFs, but by the end, we'll get to some newer and more exciting ETFs that are gaining more and more popularity as we move forward. All right, let's start with ZCN. Now, this is a great ETF if you want exposure to many Canadian companies. It includes 200 of Canada's largest companies and 95% of all of the Canadian equities market. Of course, this is great to get into if you want to broadly invest in all of Canada's companies, and it's rather easy to get into with a trading price of around $25 as of recording. As with any ETF, it's important to know what's inside of it. So let's go take a look at the holdings of ZCN. We can see that ZCN's largest holding is Canada's biggest tech stock, Shopify, closely followed by RBC, TD Bank, the Canada National Railway, and the Bank of Nova Scotia. And since this ETF tracks Canadian companies, it makes sense that it closely mirrors the Canadian economy with 30.22% financials, 13.21% materials, 12.27% industrials, and 11.56% energy. As with any fund, it's important to look at something called the MER, or the management expense ratio. This is a number that essentially tells you how much that fund is charging its investors in order to manage the fund for them. For ZCN, the management expense ratio is 0.06. This essentially works out to charging you $6 for every $1,000 that you have invested in the fund. Now, given that some mutual funds charge all the way up to 2.5%, this 0.06 number is actually very low, and that's the case with many exchange-traded index funds. The next fund we're going to take a look at is XAW. Now, this is a great fund if you want to expose your investments to companies from across the world, not just here in Canada. This fund includes companies from America, Japan, France, the UK, China, and many other companies, and it includes no Canadian stocks. This makes it a great fund to complement the first fund we talked about, because remember that first one was all Canadian companies, and this second one doesn't have any Canadian companies, so this is going to give you diversity in your portfolio so that if any one country's stock market tanks, you could be protected. And this fund is kind of like an exchange-traded fund made up of exchange-traded funds. In order to give you that exposure to the multiple countries, it uses different funds that represent different countries. But the vast majority of this fund, around 58%, is made up of American stocks, followed by Japan, China, UK, France, Germany, Switzerland, Australia, Taiwan, and more. Let's take a look at which American companies you'd be most heavily investing in if you were to buy this ETF. There are a lot of names you'll probably recognize here, with their top holding being Apple, Microsoft, Amazon, Facebook, and Google. So this could be a good option for you if you want to invest heavily in the US, but also want a little bit of exposure to other countries around the world. And it's also important to note that the management expense ratio is 0.2%. Again, this equates to roughly $20 for every $1,000 you have invested, so it's a little bit higher than the first option. But if you want to invest in a fund that doesn't take into consideration those other countries and more heavily weighs the US, I'd recommend XUU. Now, this is going to track the same companies we just talked about from the States, but it will also give you a little bit of exposure to some of the mid-sized companies and smaller companies. This is a positive because some of the smaller and mid-sized companies may experience more growth than the larger, more established companies. Now, this fund is similar to the fund we just talked about because it's made up of a bunch of other ETFs, except instead of using those those different ETFs to diversify across the planet, they're using the different ETFs to diversify across different types of American stocks. As an added benefit, the management expense ratio for this ETF is only 0.03 or $3 for every $1,000 you have invested per year. So if you want to have a lower management expense ratio, this could be a good stock for you if you also want to be invested in heavily US stocks. Now we'll get into some ETFs that are garnering a lot of attention for their potential for huge growth, but with that potential also comes some downsides that we'll talk about. First, we'll talk about eARC, otherwise known as ARK Invest. Now this has gained a lot of popularity as their CEO, Cathie Wood, has led them to gains over the past year of over 100%. And the reason they've been able to experience such huge growth is because of their unique investment philosophy. ARK Invest and Cathie Wood believe in only investing in highly innovative, disruptive companies because they believe that over the next 5 years, these tech-based stocks will be the ones that see the most growth and the most potential for investment gain. With this in mind, their top holdings include companies like Tesla, Square, Roku, Teladoc Health, Baidu, Spotify, Zillow, among others. They believe that because these companies are so innovative and are pushing the envelope, that these companies have a higher chance of having outpaced returns, potentially 10xing in some situations. By investing in these innovative companies, ARK Invest believes that they have the highest chance for outsized growth, potentially 10xing in some situations. But this potential for growth also has some downsides. Because this portfolio of companies is more actively managed, their management expense ratio is 0.8%. This amounts to about $80 for every $1,000 you have in the market. Also, because they're invested in these disruptive companies, there is a greater potential for volatility, meaning the stock price could go up and down rather quickly. Now, if you don't have a strong stomach, this could be tricky to watch your money in your portfolio go up and down. But if you believe in the investment philosophy that only the companies that are incorporating and pushing the envelope on tech will be the ones to succeed in the future, then this could be a good fund for you. And if you want to invest in only specific sections of this disruptive technology, they have individual funds that you can invest in for whichever sector you're interested in. Like this one is for autonomous tech and robotics. This one is for fintech, financial technology. This one is for genomics and biotechnology. And the list goes on, leading all the way here to ARK Invest in AI and big data. So depending on what beliefs you have about the different sectors and how likely it is that they'll be profitable moving forward, you could want to consider these more focused funds. And finally, we'll talk about EBIT. Now, this is the second ever Bitcoin ETF, and it's created right here in Canada. And this is a rather new development because as of recording this, it was created only 1 month ago. And this is special because it tracks the price of Bitcoin over time. So essentially you can invest in this cryptocurrency without actually owning Bitcoin yourself. With more and more interest growing in the cryptocurrency space, it makes sense that there's so much more demand for a fund like this that tracks cryptocurrency. Now, it could be a good fund for you if you want to invest in cryptocurrency, but don't want to actually hold it yourself and actually go through the process of creating these accounts and these wallets that you need in order to hold Bitcoin or various other cryptocurrencies. As an added benefit, unlike Bitcoin, you can actually hold this inside of a TFSA or an RRSP. Now, this allows you to have certain tax benefits when it comes to your investment growth. But just like with ARK Invest, there are some downsides because the management expense ratio is 0.75 for this, or $75 out of $1,000 invested in it. But the biggest problem I see with this fund is that you don't actually own the cryptocurrency that you're investing in. In my eyes, it makes a lot more sense to hold this personally if you just want to invest in these various cryptocurrencies, and you can even earn interest on the cryptocurrencies that you're holding. I recently made a video that goes over the best ways in Canada to buy cryptocurrency and to earn interest on your cryptocurrency, and the best ways to protect it so that you don't lose your money. If you're interested more in that, I'll link it in the description. But all in all, those are 5 great ETFs right here in Canada that you can get into for under $40. Now make sure to check out the links in the description where you can open up your investment account if you haven't already done so. And you can also take a look there at BlockFi where you can receive up to $250 in cryptocurrency depending on how much you deposit, as well as a link there to Newton where you can get $25 when you buy your first $100 of cryptocurrency through that platform. And if you've made it all the way to the end of this video, it's likely you're pretty interested in investing right here in Canada. And if that's the case for you, then feel free to to join our Discord community. We're constantly having conversations in there about Canadian investing, so feel free to check out that link to our Discord in the description. And of course, if you haven't already done so, make sure to hit the subscribe button and the notification bell and like the video. I'm constantly bringing Canadian content, whether it be news, investing, personal finance, a little bit of real estate. If you're interested in any of that, or you just want to support more Canadian content right here on YouTube, make sure to hit all those good buttons. And with all of that said, thank you so much for watching, everybody. I really hope this video helped you out at least a little bit, and I'll see you next time. This channel is supported by viewers like you. Thanks, channel members.